Welcome to Tony at 12. I'm Tony LeBlanc, and today I'm in conversation with Toby Birch, who is a Senior Investment Manager at Gower Financial Services. We're going to take a look at what happened in the world of finance last year and also have a look at a few current topics. Toby, good to see you.
And you as well, Tony. You well?
Yeah, good. Thank you very much.
Excellent.
And I've missed out this paragraph where all opinions are personal and no investment advice is being given. So there we are. Bit of a roller coaster, wasn't it? 2021.
It really has, yeah. Particularly after the so-called September sell-off, I've been expecting a pretty good final quarter, and that didn't really come to pass in markets. So if you're looking at the sort of headline returns over the last year, you might think, oh, that was not a bad year. You know, US and Britain did pretty well, but really it was what we call a very narrow leadership. And it's where the big names that we all know really shot up and left most of the others in their wake. So although the top names performed very strongly, you find that a lot of stocks were really grubbing around their 12-month low, which was quite unexpected. So this is an indication that it's not really a full participation of the whole market. And I often liken it to, sorry, Tony.
No, go ahead. You can
I liken it to generals leading an army out the trenches when the troops get left behind.
Yeah.
It's all very well charging ahead, but if you leave the bulk behind, it's not very effective. So although it had good numbers from the States in particularly, it wasn't the case for China or Japan, which were pretty lackluster or negative, in fact.
I think what is interesting to ordinary people like myself is that the market seemed to respond every time there's a new COVID strain variant. But you're saying effectively a lot of the growth that was shown in last year was just the top companies. And of course, this brings me back to the point that you're always making, that the FTSE 100 is not a very clear method of defining growth.
Yeah, I mean, particularly Europe and the UK especially, these are what we call value or traditional stocks. So that consists of industrial companies and banks in particular, and they have been lagging behind until last year. So there was a dash into these so-called value stocks, which looked pretty good on the surface, but that's kind of drifted off to a degree. So the emphasis has been on chasing anything with growth, and that's really been confined to the likes of technology companies in particular. I mean, banks have been picking up with interest rates looking to rise. We'll talk perhaps more about that later. But for now, it's been a very odd market. And on top of that, the really big thing no one talks about is the bond market, where you have government debt. And this actually fell last year. And it's been over 25 years since we've had an annual fall in government bonds. So to me, that's a bigger piece of news than what's going on in the stock markets.
Is that a concern as far as you're concerned?
It is, particularly at the beginning of this year, we're seeing stock markets wobble quite a bit, because when you have the threat of not just higher short-term interest rates, but long-term interest rates as well, the cost of money is going up. And in some ways, that's not a bad thing. It means that there's more demand for capital. Banks are going to be making more loans. It's got a hidden positive, but initially it's been like every sort of COVID variant. It's like, oh no, the world is coming to an end. But periods of higher interest rates and rising bond yields are actually pretty positive for the stock market. So I'm quite bullish overall for the year ahead. But initially, it's a bit of a headwind to overcome, because we're just not used to rates going up.
Looking at the US, the Dow, compared with the FTSE 100, Dow, I think, weighed in at 18.73% growth and the FTSE 14.3%. I realise that you've stuck in a few caveats, which is fair enough, but it just goes to show the difference in attitude between US investors, who are primarily going in for growth, and UK investors who are driven by dividends.
it's very much a UK thing. This idea of dividend distributions. It's very traditional, and it's a good thing because it shows honesty in a firm, and it shows that there's real cash generation going on. So it's a different animal compared to America. There's also an element of the corporate drive, because in the States, many executives are rewarded with share options. So that's not just being given a slug of shares in the company. It's a leveraged way of making a really big bang for your buck, because you'll do anything to drive up the share price and cash in your chips later on. So it's quite a different mindset. These were designed for tech companies as startups, but it's being jumped on by big firms who will do anything to put up share prices, and really it's quite a conflict of interest amount of debt they'll take on to ramp things up. Maybe they are caught with conflicts of interest to go for this jackpot and walk away.
We'll come on to Elizabeth Holmes in a minute. Now, let's have a look at trade deficits. A lot of people, including myself, don't quite understand what a trade deficit is as such. Now, the Chinese trade deficit with the UK was £40.5 billion last year. Effectively, it means that we're buying that much worth of goods from them and not sending much in the way back, apart from empty containers.
Yeah. This has been the state of play for about 200 years. In the opium wars of the 1840s, we were importing everything we could from China, and they didn't really want anything we had to sell, except for the silver. So going back to those days, we started growing opium in India to sell to the Chinese, and that way, completely illegal even then. And it was a way of redressing that imbalance, because we had such a huge outflow of precious metals. We were going to go bankrupt. So that's the imperial days where when in doubt, invade and colonize.
Yeah, absolutely.
Things are a bit different now. So yes, there's still this case that China's been the workshop of the world, and will continue to export. The difference now is that the Chinese Communist parties had kind of an existential crisis. They're looking for something called common prosperity, which means they don't want to be manufacturing for foreigners, but they want more domestic consumption and a better spread of wealth in their own country. And this is why they've been really coming down hard on tech giants and some of the big names who've been throwing their weight around. So in a sense, you can respect what they're doing and why, but it does mean the stock market there has been pretty battered in the last year. But it might be the best for the long run. You don't know.
And of course, they've got that property company that's on the edge of disaster.
Yeah, there's several of them have been wobbling. They've taken on far too much debt, and they're trying to sell off all kinds of assets to just to pay the bondholders their annual coupon. So that's about a third of the Chinese economy is property related, and this is another thing which kind of slowing it down. Now, I liken it a bit, without pushing the analogies too far. It's a bit like a hungry caterpillar that's been gobbling up everything in its path and growing like mad, and then suddenly it goes into like a quiet period of stasis, like a chrysalis, and then it emerges. So I think we've got that sort of neap tide, if you like, that bit between high growth, but then emerging into something else. And this is really where they have a launch pad to becoming the world's leading power, because Britain and America really have lost a lot of their leadership recently, and particularly the withdrawal from Afghanistan. That looks so weak to the Russians and Chinese, and they've got their own territorial desires, which if they see weakness, they'll fill the vacuum. That's straightforward.
Yeah, including buildings in the building islands in the South China Sea.
Yeah, it's very, very disputed area. No doubt there's some oil aspect to it as well.
Yeah, very much so. But anyway, just to sum up, it's not that we owe them 40.5 billion. It means that the amount that we actually bought from them was 40.5 billion rather, and all we've got in return to send back to them a few Rolls Royces and Bentleys.
That's right. But there's another aspect of the capital flows as well. So in America, the Chinese in the past and the Japanese have used their excess capital and bought US bonds as a kind of reserve. But again, that might change in future. the Chinese and Russians are really keen on accumulating gold as a real asset. And if bond markets start falling, this might be the tipping point where they say, we're not going to hold this stuff anymore, because they're one of the biggest holders of American bonds, for example.
Let's take a look at Apple. $3 trillion, $3 trillion market capitalization. I mean, somebody said, I think it was in the Telegraph, that their value equals the whole of the FTSE 100.
It's just under, but it's close enough to be.
It's incredible.
Be about right, and these things often occur at sort of transition phases. So we talked about this rush into the large companies and sort of passive index trackers. These are funds that just copy the stock market. They exacerbate this by buying more and more of the same stock. So eventually they become really dominant. But if you remember back in the late 90s, this is very much the case with firms like AOL, and you get these ridiculous telecom deals going on, and that was the turning point. So I see this really as kind of a redistribution phase where the less mainstream companies do well next year, and those that have jumped on the sort of index tracking bandwagon are going to be disappointed, I think, because those managers who are active and buy stocks away from the index will be rewarded, whereas last year they weren't.
Yeah, and of course, working on the basis of tracking indexes means that every time somebody drops out of that index, you've got to sell the shares and reinvest. Yeah. Yeah,
it's like it's a combine harvest that just continually gets reset every quarter or so. It creates opportunities as well.
Having looked at Apple as obviously a fantastic company, we also noted the end of Blackberry, which in its time was a market leader, wasn't it, in this sort of stuff? How quick they fall.
I love using them. Yeah. I used to love being an old dinosaur. I used to love the proper keyboard. So kids nowadays that are great with their thumbs on doing stuff. I'm still doing this.
Me too.
Easiest way to differentiate different age groups, shall we say? So I mean, they just didn't get onto the onto this whole screen-based technology. So and no doubt, these things come full circle again, and something else will pop up which will maybe push Apple into the background. We just don't know. And that it's kind of the creative destruction of capitalism that keeps it pure, and the best always succeed until you get to crony capitalism, which is another topic. But in its pure form, it works very well.
Okay, let's have a look at Theranos. Is that how it was pronounced? Isabel Holmes fraud. That took the market for a few pounds and dollars and things like that. What I wanted to ask you there, what I wanted to ask you there was, how much responsibility do the advisors and underwriters have at the time the initial public offering takes place? Because it seems to me that she must have known right from the very start it was a non-runner, but took the money.
Yeah, I mean, it's difficult for the advisors and the like, because they're not experts in that particular field. So it was a straightforward fraud. There's even a case where I think she took Joe Biden around a fake laboratory, and he was very impressed by it. And I shouldn't laugh because people lost money, but
no. But I mean,
she was very very plausible. She dressed like Steve Jobs in that kind of all in black. Very good presenter, and everyone wants a successful female CEO. It's really the drive nowadays, and unfortunately, she's been a very bad advert in that she was making out that she could create a test for 200 diseases from one blood sample, and so really the other aspect about this is about directors, because they're ultimately responsible for the company. So you have this sort of beauty parade of non-executives. Very famous political and corporate names who had no knowledge of genetics or medicine or blood testing, for that matter. So it's very much a king with no clothes thing.
Yeah.
Until you see it, you're not going to notice. But
is it a saying in the US in the tech side? If you can't make it, fake it.
And I think that's a good example. it was quite something. I mean, common sense would tell you that a little drop of blood is just not enough material for
Right.
200 tests.
Yeah.
It's just mad. Sometimes the people who ask questions get jumped on. So a bit like Robert Maxwell in the old days, if you ever threatened him, he'd wallop you with legal action. And it's very much the case here that any criticism is that should itself should have raised alarm bells when you can't take criticism like that.
Yeah, very much so. But you don't think it's not the 1990s revisited in terms of the tech bubble bursting? It's more of a one-off.
Yeah, I mean, it's going to. I think it's going to keep on happening. Everyone says lessons are learned, but plausible people can can convince anyone of anything, as we've seen more recently as well. But on the subject of tech bubble, I think we're a long way off from that. With interest rates and bond yields being so low, although they're going up, they're a fraction of where they were in 2000, and it's not going to be this that knocks the wind out of the sails for tech firms. I think we've got a pretty strong markets going ahead, which we can perhaps talk about later.
Yeah. Right. The next item that I've got on the topics list is the fact that Aldi might possibly consider taking over Marks and Spencer's, keeping the food and flogging off the clothes to Next. It's incredible, isn't it? Some of the speculation you see in the press.
Yeah, I mean, there's an element of that which I think kind of makes sense on the clothing side. You think of Next, they sell lots of third-party brands, and they don't just try and do their own thing. That it's almost like a supermarket of clothing, so it's pretty smart. And apparently, this is what people really like it. And if you go into Marks and Spencer's branch, it does seem fairly dowdy and kind of middle of the road across the board. I mean, there's not much I personally just apart from the sandwich. So that
granny knickers, Toby. Granny knickers.
Yeah, that's right. Only at weekends.
But I mean, obviously, the next model is a bit similar, I suppose, to Debenhams in terms of the fact Debenhams used to have a lot of concessions in there. But I suppose Next, the stores are a manageable size, aren't they? And a lot of people
it's online stuff, which is very powerful.
Everyone's been saying that M&S has lost its way for a long time, and it still hasn't found it, has it?
Yeah, you just get the feel. Just go into a branch and just feel the atmosphere. They've been cutting back a lot of staff as well. It's classic sort of terminal decline behaviour. Cut the easy costs when really that puts a strain on managing the branches and serving customers. And the whole point of getting offline and going to a shop is to have that experience. And if the staff aren't there, it's kind of, again, I have a personal pet hate of these machines. We have to put the barcodes through yourself and pay. It just drives me bonkers. I'm very old fashioned. I often politely refuse the offer to use one and say I'd like to be served. Thank you.
Christine and I have educated ourselves, mainly Christine, I have to say, and she's now very competent in Messrs Tesco and M&S food in terms of making it work. But it isn't, the trouble is, of course, it means that this is going to go on more and more. And as you say, the personal touch is just going to drop out of it at all, in total. But there we are. Quite encouraging investment news in the UK with Nissan putting $1 billion into their Sunderland works, and Astra Zeneca with the Cambridge Discovery Centre. Despite Brexit, people are still interested in investing in the UK.
Very much so. If you also look away from some stock markets, like look at private equity firms, they are very cash heavy. They really want to invest. So they see bargains not just in terms of the companies themselves, but also from currency. So the pound's been pretty weak until recently, and so they've got a double win of cheap companies, cheap currency, and also the UK stock market relative to the rest of the world is really at a 30-year low in comparison. So it's just it's not, I use the phrase no-brainer, but it's a pretty good idea if you're buying stuff at a big discount on several fronts. Then you put your money to work, and it's really not a bad place in terms of property rights and law and order. and staff. So I think it's just follow the money if you're ever in doubt, and the money is going.
Yeah, but the thing is that a lot of these companies that buy up other companies, if you take, for example, the Boots private equity situation, they haven't done much in the way of asset stripping.
And that's often the worry, that it's just because they effectively have like 5 to 7 year turnaround time as a private equity firm or fund to acquire a company, maybe have some financial engineering, put on some debt, and cut some costs. So that's sort of cynical side to it. But on the other hand, some firms need a reboot, and with a bit of fresh capital that they can really grow and expand. So there's two sides to it. I tend to fall on the cynic side when it comes to asset stripping, but it's not always the case.
No, not at all. UK inflation hovering around 5%. That's a bit of a concern, isn't it? Does a 15 basis point increase in the Bank of England base rate make much odds? I mean, it seems to me to be, not a large difference.
Yeah, it's more sort of psychological and symbolic, because UK is one of the first places to put rates up at all, and really they've been pretty remiss in November, because they indicated to the market that rates are going up, and it didn't happen. So we saw sterling fall away towards the end of the year, but as soon as rates gone up, sterling's been really pushing higher. So I think in reality there's not much difference, but psychologically it does really put a boost under the currency. Really what we've lacked in the UK is this idea of the stock market and the pound going up together. Normally they used to act in sort of in opposites. It's a positive sign if you get UK market going up and the pound as well. So you could get a double gain for those who've been investing on the currency and the shares themselves. But just on the inflation note, I think we're going to peak even higher at 7% in April.
Right.
Forecast. And I'm in two minds here, because there's so much headline news about inflation. You kind of think, is this now peaked, and is it going to pass on? I think that the answer is yes, but ultimately customers are still going to be left with much higher prices. And natural gas is one example. I think is really hit hard. So it's all very well for economists to talk about base effects and inflation dropping out as the year goes on, but for the poor punters on the ground, the prices don't go down, unfortunately.
Well, they've got to go through the process of funding the inflation, as it were. And interestingly, German inflation up to 5.3%, and of course, following World War One, they get really panicky about inflation, don't they, as a nation?
Yes. Since the Weimar Republic and the like, it's been inflation has been the key thing that they worry about. Again, inflation in itself is really, from a German point of view, is, I wouldn't say missing the point, but no one ever peels back the sort of onion layers to say what was the cause of inflation. So if you go back to the Weimar Republic, what the government did then was they started to confiscate assets and swap it for government bonds.
Yeah.
And that was really the tipping point for people to lose faith in the government and lose faith in the currency. So people talk about wheelbarrows of money. And the issue was the prices were going up quicker than the money could be printed. So it was an effect rather than a cause of inflation. So if we get into a similar situation of just taxing everything that moves and adding more to controls, this is where you lose faith. So I think of inflation more of a thermometer rather than the cause itself.
Yeah, very much so. Bitcoins, they've taken a bit of a hit recently.
Yeah, they're down about a third, and I mean their rise is connected with that point about inflation and loss of faith, because people are looking to escape the banking system, because what we're seeing more and more of is this demonization of cash. And for the younger generation, that I doubt many carry cash at all, but for people like me, I see it as more of a symbolic thing of being able to exit the banking system, because once you're stuck with digital money, there's no way out. You can't carry it anywhere. If you get more repressive regimes, which is I think a thing in the West now, with a lot of hypocrisy thrown in, as a thing with the UK government. This means people want to have a stash of some assets somewhere to escape with. And cryptocurrency is the ideal mobile type of money. It's called gold with wings. So I can see why it's been ramped up and may well go much higher. But the recent decline is quite strange. What they're becoming more of is a bit like a risk asset.
Yeah.
So when gold and stock market or gold and technology sell off, Bitcoin goes down as well. Whereas last year when you had bond yields going up, Bitcoin shot up. It's a really interesting asset behavior and a great diversifier as well. I think ultimately what's going on is that we don't know who created cryptocurrencies, but it's clear now that central banks want to have their own what's called central bank digital currencies for their own countries. And that all sounds well and good, but there's a control aspect to this. So if we get more of a move towards tyranny, governments can control what you spend on and who gets what money. And what you can do with it becomes almost like a virtual prison. You can't travel or spend it. It's really quite concerning. This is why I think the Bank of England recently was saying that Bitcoin's going to fall to zero. And ultimately, that could happen if they confiscate it or just make it illegal and say, well, actually, we've got our own view here now. This is much better. So I'm really cynical on this point, I'm afraid.
We'll have to see. Energy prices have shot up as a result of raw materials, and this cap is reviewed, I believe, in April. But bearing in mind the number of small providers that have gone bust, was the regulation sufficiently robust, do you think?
I think it's like all regulation is like generals fighting the last war.
Yeah.
The idea of the price caps was to be fairer to the public, but ultimately it couldn't cater for this idea that the input costs were going to shoot up. So looking even to just a year ago, the price per therm, the unit of natural gas energy, that was about 50 pence roughly.
Mm-hmm. Yeah.
And by the close of the year, it broken through £2. So these companies have got a quadrupling of their costs, and they can't pass it on to the customer. So they just go, some of them have gone bust, because if you can't pass on costs, then you don't have a limited profit margin anyway.
Yeah, very much so.
I think the idea is to have lots of providers and lots of competition to make this work. So they're going to, I think in April, I think the cap is going to rise by about 50%.
Mm-hmm.
I know certainly for here in Guernsey, my gas prices have gone up 50% this year.
Yeah.
And it's pretty painful. And, I think for some in the UK, you've got hundreds of pounds worth of rises on average. And for obviously the more vulnerable and elderly, this could be life-threatening. It really is serious.
It is, and it didn't help when that Scottish and Southern subsidiary talked about jumping up and down and doing star whatnots and everything else.
I think they had to grab a pet as well to keep you warm. And
the CEO backed down substantially this morning on the Today program, and unconditional apology.
I think it was just a sort of attempt at lightheartedness, which these days
backfired.
The public don't like humour, but it is a serious point. It's talking about eating more porridge. I think it's a case of eating more gruel.
Absolutely. Please, sir, may I have some more? Interesting to see that 1 million more people in the UK are likely to get into the higher tax rate in April.
Yeah, this really is pushing the boot end, because you've obviously got these inflation costs we've just been mentioning, and the national insurance, social security costs are going up in April as well. So you've got higher taxes, higher inflation, and think about people say, "Oh, the wage rises are going to come." Do you really get 5 to 10% wage rises nowadays without changing your job? And in any case, this is in arrears, so you've already had a year of rising prices. You've been squeezed, got more tax. This is a real perfect storm. And now with the allowances frozen, people are now going to pay more income tax potentially. So it's very short-sighted of the Conservatives, coming at a time when they've obviously been hypocrites about social distancing and parties. This is common among a lot of Western leaders now. This kind of arrogance, which you saw in the French, pre-French Revolution.
Yeah.
I know "let them eat cake" was not a real statement, but it's that kind of ideas that we'll go around in public, punching elbows and wearing masks. Then as soon as the camera's out of the way, they're having, mixing, having drinks, and the poor old staff are still wearing masks like little servants in livery.
Yeah, it's crazy.
It really upsets me. This kind of, I use the word arrogance, and that's what it is.
It's two-faced.
Yeah,
two-faced, very much so.
Let's
just finish off with something I never thought I'd see, and that was the fact that Tesla cars sold more in the UK than Ford in 2021. That's incredible, isn't it?
Yeah, I think this is a bit of a bandwagon where people are jumping on the side to everything's going electric, but the infrastructure is not going to be there for a decade.
No, that's right.
Grid capacity is nowhere near. All the practicalities aren't there, and as a result of this, there's been underinvestment in old-fashioned fossil fuels. So again, it's going to keep energy prices higher at a time when you could see some pretty cold weather around. And this is, again, this idea of jumping on this a bandwagon of sort of touchy-feeliness while ignoring the practicalities. And there's going to be a price to pay. I mean, there've been some stories about people setting fire to their Teslas because the batteries cost like $20,000 to replace. So once your battery's knackered, then
you've had it.
You had it, yeah. And I personally, as a chronic contrarian, I'd probably look to buy a diesel car and run it for 10 years until it gets banned. But this whole idea of sort of decarbonising and going against commuting and fossil fuels, it's going to hit the ropes probably sooner rather than later.
Yeah,
and we saw it in Germany last year, where had to get the diesel buses out because the ones with renewable power didn't work. It's just Mother Nature doesn't like being told what to do.
There's no quick fix to any of this, and as they fix it, they're going to discover quite how expensive it all is.
And also again, there's an element of hypocrisy to it, because much of the manufacturing and the inputs to these vehicles goes on unseen, so that the environmental damage, it can be quite substantial. And what you're effectively doing is moving carbon production out of cities into other countries. But some people just want to feel fuzzy and pay lots of money for stuff which makes them feel good, and that's down to them.
And we know how good car manufacturers are at faking stats, looking at that diesel business.
among other industries,
among other similar industries may be available. Toby, it's been great to talk to you as ever. Many thanks for sparing me some time today.
And thank you.
Hopefully we'll have another chat in April and see how things have turned out.
Good morning. We'll be there to make it.
All the best. Thank you so much.
Thanks, Tony.